Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, June 7th, 2021 DecisionPoint show. My name's Erin Swenlin, and I am here with my father, Carl Swenlin. We are here to prepare you for the week ahead. We've got all kinds of charts to tell you about what's going on in the market. But before we get started, welcome, Dad. How's everything going today? A little cooler.
Right, and sitting here wondering when the market's going to do something.
I know, right?
Yeah.
It's just really stuck in a bit of a trading zone, but of course we'll look at those charts very shortly when we do our SPY and indicator overview. I'm going to talk, Carl and I are both going to talk about cardinal highs and cardinal lows and how we use those to determine divergences on our charts. We always talk about cardinal highs and lows, but I have subscribers email me often and are like, what exactly is a cardinal high and a cardinal low? And so we'll talk a little bit about those. I want to focus in on the energy XLE. We had a pretty interesting breakout on the weekly chart for XLE, so I want to cover that. And we'll lead right on into the two diamonds of the week that I have this week, and I'm pretty excited about both of them. They're looking pretty good right now. So let's go ahead and get right on into it. I'm going to pass the screen to you, Dad. You can give us your thoughts.
Okay, here's what I've been talking about. This narrow range right here has been captivating for about over a month. Really, there's a wider range here that's containing the movement, but really there's two weeks worth of data right inside these two lines, which is 1.5% wide, not very wide at all. We had a double bottom last month, and it's not really fulfilled the upside objective on that, or the minimum upside target, which would be up here someplace. The distance between here and here, that would put it price up here somewhere. Might be, could he get there tomorrow, but it's really been doing nothing for like 2 weeks. I noticed that the total S&P volume contracted again today because there's really not a lot of energy or activity going on. This hasn't updated yet today, but we can see that the percent of stocks above their 20, 50, and 200 EMA has been dropping off for over a month, or going on 2 months really. And even as the market has made a new all-time high last week. That these are indicators, like they're really is about as unambiguous as you can get. It tells you the percent, ergo the number of stocks that are above their 20 EMA. Right now, it's only 70% with the market making new highs. So they're gradually dropping off. There was no climax action today. Looks like we did see some new lows. I'm sorry, the net advanced declines were negative today, but still not at climactic levels. The short-term indicator, the STOB and V for breadth and volume, they are contracting again today. And we're going to be talking about cardinal highs and lows, but basically after, we'll say it's an important high, you'll notice that as price drops off, so does the indicator. And that drop off is not significant. It's because it's following price. The Silver Cross Index This is the percent of stocks on IT buy signals. It's only 82%, not impossibly low. It's not great, but you can see here before this, for the bear market, we had a pretty sharp decline. It started around 80 and dropped off to 70%, and then it kind of lost it. But this is still not a good situation to be in, and I interpret it as the next likely thing to happen is price moving down.
Before you leave that chart, we also have a negative crossover on that golden cross index. We finally ended up getting that. I think it was early last week, but we don't see those that often. And the last one didn't amount to a whole lot, but.
Okay, yes. Obviously in this context here at the scale, it doesn't look like much. Over here, it looks like the world is ending, which it's not. But it's still, we get a good view of that crossover. And again, it's not great because this thing doesn't wobble around a lot. I got it on a 20 EMA for the index. The signal line is set for 20 EMA, and it's kind of steady. Again, price basically going to new highs, and indicators dropping off. Again, not a healthy situation. Let's take a look at Bitcoin. Okay, we've got a triangle here. It's basically a reverse pennant, and it kind of tried to break it down there, but we'll see how that continues tomorrow. This is a significant pattern, I think. It's rounded top. It's a giant topping action, which would send it, which implies to me that it's going to go back to the basing pattern, which is around, on this chart, around 10,000. We don't know.
Right. No, there are a lot of people out there.
Yeah,
going,
we don't know when.
10,000.
Yeah, we don't know when when people are going to give up on Bitcoin, but but it certainly has been losing momentum over a number of months. Okay, the dollar is still jigging around here, and if we look at gold, we'll see pretty much the same kind of activity, although it's in an upswing, whereas the dollar was on a downswing. This is the rising wedge formation it broke down from. I've left that in there because I think it's still pertinent. I think it still could be a barrier to higher prices on gold. Mm-hmm. Gold miners, much like gold, jiggling around trying to figure out what it's going to do next. This, you can see where it went, we kind of went parabolic here on a short-term basis, and it basically broke down from that. This rising trend line still could be the controlling feature on the chart for any lower activity. It's in an uptrend, and it's got to, trends go up and down, but they go in one direction. Crude oil kind of stalling out. It did break above this rising wedge, which is a extra bullish because it should have broken down. That's the bearish formation.
Yeah, oil's just rising. That rising bottoms line is just going to hold up there for a while, even if it's getting steep.
Right. Here's a weekly chart, and here's crude, West Texas Intermediate crude, and comparing it to what USO is doing, it tends to be a little more liberal in its movement, but the cost of owning the contracts is translated into what USO is, how USO moves. Treasuries, kind of flat.
Yeah, pretty boring.
Right.
The yield chart hasn't updated yet, has it?
The yield array, no, it's too soon for that. Too soon, but you pointed out the saucer with handle. This is a really kind of a hard charging handle. So we're not, not so sure that's going to resolve upward. Let me look at the 10-year. We've been paying a lot of attention to that. I think the controlling factor here are the horizontal lines in this range. I think that's where we should look for support. If it breaks down further out of this rising trend line, I'm not too concerned about it. If it breaks down here, that could be a problem.
Certainly the PMO is suggesting it will.
Right, it is. We do have, you haven't checked the sectors yet, but this is XLY, consumer discretionary. It's really close to having a downside crossover on the 2050 group. And it was really within 1/100th of a point earlier today, but it's still squeaking along there. But anyway, this is the one sector that's looking rather poorly right now. And notice that, okay, we've got it dropping off in price, and this is following along. The Silver Cross Index is down to 70%. So that's getting an area where you could see a downdraft pretty quickly. So caution there. And I believe that's got
that
it covered.
Pretty much covers the overview. Let's talk a little bit about the cardinal highs and cardinal lows. Honestly, this is a concept you reinforced for me, because a lot of times what I was doing is I was looking at, where the indicator maybe gave us the crossover and then drawing my vertical on that just to see, okay, well, when the indicator crossed below, what did price do? But honestly, drawing in these cardinal highs and cardinal lows gives you a much better indication of how the indicator reacts. But more importantly, this is how we determine those negative and positive divergences. So, I mean, what do you consider a cardinal high? What do you consider a cardinal low? Because I think that's where the confusion sometimes comes in.
Yeah, it's just basically an important top. In a rising trend, it would be the top. Like here, there was a cardinal high at there in February, okay, and then after that we had a down tick, but I could have put a cardinal low in this point. But basically, what I'm looking at is, all right, price going down. Anything that happens in the way that following that price, I don't pay much attention to. In other words, if the indicators are going down, and you can see they are in that off that low, that's fine. They should be. They're confirming what we're seeing in price. Especially on the downswings, you rarely see the indicators heading up after price starts down. Whereas with price going up, you quite often can see the indicators not confirming, dropping off as price is going higher.
Right. And, it makes it a lot easier to see. when you're looking between these cardinal tops. Let's see what other chart may I bring in here that would be of interest. So we were talking about, I think the other one that's really a good example, and I don't think these have all updated as we said, but it helps you with a little bit more a microscopic look of
Right.
cardinal highs and cardinal lows. So in this case, we're only marking those cardinal highs. And, to be honest, as, I've talked about before, is a lot of times people think that we're, perma bears, that we're always bearish. But really, the way I look at it is we have to play devil's advocate, right? And let's face it, the market is more likely and mostly going up. So that can kind of make us look very bearish because we're trying to find those indications that the market is weak, that we need to be careful, that we're nearing a top, and that sort of thing. And I think this is usually a really good way to determine those divergences after and before tops and as well at bottoms. You can see what the indicators do. But in particular, we're looking at this one, and this is our percent of stocks above their 20, 50, and 200. It isn't updated for the day, but I don't need it to for the concept. You were pointing it out on your chart. In fact, you had drawn the declining tops line even out further here. And again, you've got prices rising when this starts, and then they're going down, and that's your negative divergence. And that gives you a clearer picture of what's going on by just using these cardinal tops and then using cardinal lows.
One of the shortcomings of these kind of indicators is they are equal weighted, and meaning each stock contributes equally to the outcome of that indicator, whereas the price index is cap weighted. And so you can have a handful of the really big cap stocks holding that price index up, whereas you can see in the indicators where things are deteriorating, there are fewer and fewer stocks participating in the up move of this price.
Exactly. And that's typically, as you can see, before these cardinal tops, that's the type of information you want to see. And it does give you a pretty good indication of, if you're in a dicey period, if you will, if things are looking a little bit concerning. With this chart, I've been watching these rising bottoms, the confirmation. But as we talk about often, confirmations are kind of not as important, clearly, as say divergence.
They're not as useless. Meaningful. Yeah, they're useless, essentially. Why would we be surprised that the indicator is falling price? We shouldn't be.
Right.
Whereas when the price is going up and the indicator is heading down, now that's important.
Right, exactly. So that's the basics of using those cardinal highs and cardinal lows. And again, it's not a exact science as to which ones you pick. But typically, like these back here would be your cardinal lows. It's pretty obvious. That was a major pivot point. There's probably one right in here you could call a cardinal low. But we've been focusing, because the price chart is showing higher prices, of course, we're concentrating a bit more on those cardinal tops. And like I said, it's a matter of, the market's going up. We're here to tell you when things don't look good. That's, when there's problems going on under the surface, that's our job. Everybody's out there all bullish, but, we have to point out when there are problems going on under the surface.
Just as a further explanation, I only recently, came up with the idea of following the tops in this way by drawing vertical lines. That's not necessarily original thought within the technical analysis field, but it's just a matter that to make it easier to follow things. But so I started following the tops, and recently I started putting in the bottoms.
Mm-hmm. And again, it's the bottoms are very helpful just so you can see what's going on with the indicators, you know, before and after. But, you know, when we're in a giant upward trending move, I mean, obviously, if we're in the middle of a correction, we're looking for those cardinal bottoms and seeing what happens when the price does hit those lows. But typically, as we are right now, we're paying a lot more attention to those tops and looking for those negative divergences that are telling us that, you know, there might be some problems as far as price goes with the SPY in this case. All right, well, let's move.
Every one of those indexes is diverging now. You know, the Silver Cross index for each of those indexes, the large cap, mid cap, and small cap.
Yep, there's NASDAQ. Here's the small cap one. This is our golden and silver cross index chart list. And Carl keeps this annotated for our subscribers. So you can go to our chart list as a subscriber and get to pay attention to and see on a, you know, a daily, weekly basis, the changes and those divergences as they come up. So really excellent resource there for you. But yes, you can see we're still seeing some of these we're not getting the confirmations that we need, or the positive divergences. We're seeing all of these negative divergences right now on these indicators. So really interesting. So I'm going to move on. I'm going to talk a little bit about the energy sector, and then I'm going to move into two of my diamonds. We have just a little bit of time left here. So someone in the free DecisionPoint trading room, I do a free trading room every Monday. And if you go to our website, you'll see the little ad for it. If you click on it, or if you just sign up on our email list, you'll get information on how to register for that trading room. Today we had Arthur Hill joining us in the trading room. It was a really great show. I do send out those recordings, so they are available if you register. Highly recommend you check it out. But someone had mentioned, hey, take a look at XLE, particularly on the weekly chart. Well, right now, as you can see, we do have a bearish rising wedge. It is trying very hard to break out. And we already saw oil has broken out in a bullish way from its rising wedge. And of course, you know, the energy sector, we're going to see a lot of mirroring to what's going on with oil. But underneath the surface, I mean, it still looks pretty powerful. I know we're getting these, some of these are overbought, these readings, but I often will point out when, you know, we're in a nice rally or an upward swing, you'll see these indicators stay in overbought territory for some time. But we have to get this breakout. That's going to really tell us that things are going well on that daily chart. But I don't know if you've seen the weekly chart yet, Dad. It's kind of interesting here. So we had the giant double bottom here in, this is XLE's, the weekly chart. And we got the breakout from that confirmation line in a very constructive way. It pulled back to the 20, pulled back to that confirmation line, and has been bouncing since then. Well, one of the areas of resistance and support, it's sort of an intermediary line, but it touches here. We've got a touch back here. We've got touches over here. And you can see that we just, that $55 level, we just got that breakout right now above that level. We're coming up to the next level of overhead resistance right in this area here at the 57.25, the $60 level is what we'll be looking at. But really, I love the way this double bottom set up. I love the pullback with a flag formation, and now we're getting another breakout here. And this is the level I'm going to be watching, is that $58 level. See if we can get that breakout. But it's, you know, certainly looking good. Obviously, very overbought PMO at this point, but two little bottoms here right above that signal line. It looks pretty good to me. So I'm liking the energy sector still. I think it's still going to keep chugging along. So consequently, I have a chart for you from real estate, actually. It was a diamond last week. And I'm going to show you, actually, I'm going to show you DCP. This was, full disclosure, I do own it. Get back here. And this one is in a pipelines area. And we picked this one last week on Wednesday. I was really excited when somebody asked to see it in the trading room and I saw what it was doing. It's always nice to get that surprise, but you know, it is a little extended now. You can see that RSI has gotten a little bit on the overbought side. But just an example, I mean, this was a diamond that we picked last week that's doing quite well. And you're seeing the volume coming in here. The PMO is not overbought. Like I said, RSI is a bit on the overbought side. So if we keep an eye on it, you might be able to get a good entry on a pullback. But in the energy sector, I mean, this is just one of those areas that is looking pretty good. The other one I talked about this morning, oops, not USA Truck. No, the one I talked about this morning was MJ. So I'm going to go find that. Whoops, wrong one. Well, let's look at Vornado Realty Trust, and then I'll talk about Mary Jane. All right, so this one is one we picked last week. I think this was a Tuesday pick. Did the pullback, which I thought was, again, really constructive. I don't like it to lose a breakout, but it came right back down. You can see right to that 5-day EMA, and it's now charging back upward. The RSI is not overbought. You've got a PMO that's on a buy signal that's oversold. You've got the industry group itself, the specialty REITs. You're getting a nice outperformance from the S&P. VNO, Vornado Realty, is also outperforming not only the S&P, but it's also outperforming its group. So you know that this is one of the stronger stocks within that sector. So I have to say, I really like Vornado Realty. That is definitely going to be a diamond of the week. And if I can find Ms. Mary Jane, I really want to use that chart that I marked up, but it doesn't look like I'm going to have time. I didn't get to it, but we can just do this right here. This is the Alternative Harvest ETF. I've been banging my head on, banging my ruler on the table in my trading rooms. I still really like the marijuana stocks right now. To me, they just keep getting better and better looking. We have a nice, almost a reverse head and shoulders here, but mainly we had this falling wedge that was bullish. We're getting the breakout on it. RSI is positive, and now the PMO on MJ is positive as well. And you can see that it's starting to pick up and outperform the S&P as well. So MJ is a diamond of the week, and VNO is also your diamond of the week. That's all we have. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.